If you've not been living under a rock, then you'll have noticed that the recent headlines have all revolved around the meteoric rise of Bitcoin. But the recent surge beyond the $70,000 mark has stirred up a frenzy in the crypto world, unlike anything we've seen before. As the digital gold continues to break barriers, many are left wondering, is this just another cycle, or are we witnessing the dawn of a new era in cryptocurrency? Well, lucky for you, I'm about to break down the 7 compelling signals that suggest the Bitcoin bull run has only just begun. Bitcoin's price is soaring to new all-time highs, and the federal funds rate for borrowing US dollars has not even started to drop. The last time Bitcoin's price soared this high, the dollar supply was at high tide and the Fed held rates down low. This time, it did it without low rates. James Butterfield, head of research at digital asset management firm CoinShares, recently told ABC News, "The price surge has coincided with a period of stubbornly high interest rates, suggesting that the jump in demand owes little to excess cash in search of a place to land." As we anticipate a likely change, potentially in 2024, Bitcoin's role as a deflationary hedge against the Federal Reserve's policies is poised to become a significant driver of demand for cryptocurrency. In a significant breakthrough, Bitcoin marked a historic milestone in February by producing its first ever $20,000 monthly candle. A noteworthy achievement hinting at potential price volatility on the horizon. The impact was profound, as highlighted by a prominent on-chain analyst at Glassnode, who exclaimed, "Feb 2024 printed a 19.84K Bitcoin candle, the largest monthly USD increase in history." This monumental surge added a staggering $390 billion to the Bitcoin market cap, representing an impressive 47% increase. According to cryptocurrency data analytics firm Kiyoko, research in a late February report, weekend crypto trading continues to drop as a percentage of weekly volume. However, this trend has been long coming. The share of Bitcoin traded on weekends has declined significantly over the past 6 years, dropping from 24% in 2018 to just 17% in 2023. That most likely indicates greater acceptance and use of cryptocurrencies by institutions that operate during business hours, Mondays through Fridays. This trend has also continued in 2024, with Kiyoko stating that so far in 2024, just 13% of all Bitcoin transactions between January 1st and February 20th were executed over the weekend. Breaking this down by region, weekend trading has declined on both offshore and US available exchanges. The drop from 17 to 13% shows the massive effect of spot Bitcoin exchange traded funds, ETFs, on the market. The Bitcoin price rally took an unexpected turn when, despite the halving not yet occurring, the surge in demand overwhelmed platforms like Coinbase. Towards the end of February, the San Francisco-based cryptocurrency exchange experienced a significant outage as the crypto markets reached a boiling point. Struggling to handle the unprecedented volume of requests, Coinbase faltered, resulting in a widespread service disruption. Adding to the turmoil, a technical glitch erroneously displayed zero balances on user accounts, exacerbating the situation for investors. In response to the outage, CEO Brian Armstrong took to social media, stating apps are now recovering. "We had modeled a 10-time surge in traffic and load tested it. This exceeded that number. It's expensive to keep services over-provisioned, but we'll need to keep working on auto-scaling solutions and killing any remaining bottlenecks." The outage occurred shortly after Bitcoin's price soared past $60,000 on the exchange, marking the highest point the crypto had reached since 2021. The news of the Coinbase outage quickly spread across social media platforms, contributing to Bitcoin's subsequent loss of around $2,800 in value that Wednesday afternoon. In a dramatic move, an anonymous whale withdrew a staggering $1 billion worth of Bitcoins from Coinbase. On March 1st, the whale pulled out 16,000 Bitcoin according to data from Sentiment. Despite Bitcoin nearing its previous all-time high, this whale showed no interest in selling. Moreover, they're not alone in their convictions. Throughout February, whales continued to move over $1 billion worth of Bitcoin off Coinbase. While they could have sold for a profit, their actions suggest they anticipate even higher price levels in the future. As a result, Bitcoin holdings on exchanges have plummeted to a 6-year low, a trend that shows no sign of changing following a massive $1 billion withdrawal. This trend underscores the high conviction, long-term outlook, and widespread global support for Bitcoin's trajectory. According to data from BitMEX, spot Bitcoin ETFs collectively held an impressive 776,464 Bitcoin as the month of March began. This amounts to a significant 4% of the total Bitcoin supply, a remarkable feat achieved in just under 2 months by the Wall Street regulated ETF market. While this development may not align with Arthur Hughes' fears of ETFs potentially undermining Bitcoin, it nonetheless represents a substantial dent in the on-chain spot supply of Bitcoin. Such rapid accumulation hints at a looming supply and demand shock that could exert considerable upward pressure on prices. Grayscale Investments research head summarizes the situation, noting there's simply not enough Bitcoin to accommodate all the new demand, and so natural supply and demand dynamics are driving prices higher. This scarcity-driven dynamic reinforces Bitcoin's value proposition and underscores its potential for further price appreciation. ETFs are poised to engage in a fierce competition for Bitcoin alongside retail investors. Furthermore, major banks are poised to enter the fray and potentially drive scarcity in prices to unprecedented levels. In a significant development within the House Financial Services Committee, REP, Mike Flood recently spearheaded a resolution aimed at safeguarding consumers by eliminating barriers preventing highly regulated banks from serving as custodians of digital assets. With ETF issuers and now regulated major banks on the cusp of entering the Bitcoin custody arena, the global scarcity of the 21 million Bitcoin ever issued is set to intensify. This influx of institutional participation promises to further fuel the ongoing supply and demand dynamics, propelling Bitcoin to new heights. So, as Bitcoin continues its upward trajectory, fueled by a convergence of institutional interest and global economic shifts, the stage is set for a bull run of epic proportions. But what do you think? Let us know in the comments where you think Bitcoin is going come the halving.
None of the content in this channel should be considered as financial advice, and you shouldn't make investment decisions based on it. It's highly advisable to consult a professional before making any decisions that may or may not be based on the above content, as this is solely for entertainment purposes only.